Bitcoin is approaching $57,000 very, very quickly. These are the targets that we've set out throughout last week. We approaching the second target, was first 59. If we didn't hold 59, we said 55. If not 55, 52. And then the worst case scenario would be $48,000. So it's all playing out in real time. You can see over here with the Banter Bubbles charts looking absolutely bleak and brutal on the hourly, on the daily, on the weekly, and even on the monthly, all these gains being given up. We have the monthly close for Bitcoin, which has also taken place, as well as for the rest of the cryptocurrencies. And of course, it is a little bit of a bleak picture. So let's start off with some words of wisdom and a little bit of advice from Bully over here, which is pretty significant. He says, buy when you absolutely hate crypto and you want to leave, and sell when you're about to show your significant other your portfolio balance. Literally works every single time. You guys know it. You remember when you were flexing those P&Ls on your Phantom wallet from those meme coin profits, that was the sign, that was the signal, those were the opportunities to start to take some profits. And now we have the April close for Bitcoin, which of course is down negative 14.7%. And usually this starts a new trend, which means consecutively it could really be a sell in May and go away type of scenario. So without further ado, let's get into the alpha of the show. Smash the like button, hit the bell notification, and definitely subscribe to the channel, and let's get going. We spoke about the volume diminishing on this Bitcoin sell-off, which is currently still the case. And that's actually a good thing. That is indicative of a corrective move, right? So not all hope is lost or gone within this cycle. I'm going to show you where we are within the macro cycle. We're going to also have a look at the key levels and will they hold. But one thing I can tell you is that Bitcoin needs to bounce very, very quickly. Otherwise, my trading systems are going to start to invalidate. And I've marked it off over here. You can see again the diminishing volume. This is our weekly time frame. It's also still part of the plan in the sense that you're creating the handle part of the cup and handle formation, which is of course that chart pattern. You'll notice the asterisk signs which have now been added on, and we said that things start to become incredibly bearish once you get below the pink box over here, which is $59,000. Now that depends on how we get there and how long we stay there for. If we start to close multiple candles below those levels, then yes, it becomes bearish. As it currently stands, right now, just before the show started, we officially pierced the stop and reversal indicator over here, which is the rising stars, the little asterisk signs. You can see they've been pierced, popping up to the top side now, thus showing that that is going to be major resistance in the future, which needs to be cleared overhead in order to flip the trend back towards the upside. So we are holding, let's clear it up a little bit so it makes it nice and clean. We are currently still holding that 21 exponential moving average. It's flat out, which again is showing you that there is a real shift taking place in the market. But so long as price can bounce off of this level, hold that level and quickly reclaim the $59,000 level, there is still hope for the bulls. Now, this is where you have to pay quite a lot of attention, because if there's failure to do that and you can't see consecutive closes below and this starts to roll over, any spikes that come into these areas from that moment onwards are going to be short selling opportunities. And then we're going to have to look for a much deeper correction within the cycle. Remember, it's all still on par if Bitcoin even goes down as far as 40% within a bull market. You can see those corrections going all the way down 40% from top to bottom. Currently, as it stands, this correction is 22%, which is all exactly the same as what we previously saw within all these previous dips throughout the cycle. So will it be that this is going to be one of the deeper corrections compared to the prior ones? Well, only time will tell. But one thing I can tell you is that there is still hope for the macro cycle because of this. Now, it depends on what your thesis is. It depends on which models you tend to follow and agree with and listen to. But Jason says, well, over here, he says that he's now 38 years old. Also, this year is 2024, which the 18.6-year real estate cycle is currently in what you call the winner's curse phase. What is the winner's curse phase? It's where everybody thinks that they're a winner because it's really an up-only environment. Anything that you buy within crypto stocks, real estate, or commodities tends to just go up. So that's ultimately what he's covering over here. He says that we're still in a macro bull market, which could last until around 2026. Okay. He says over here, you only get a couple of opportunities in your lifetime to play out this entire cycle. There's 2020. I'll zoom in on this in just a moment, but ultimately bookmark this, pay attention to it, and let's quickly have a look at his footnote. Commodities like gold and silver may run longer than in 2026. Real estate may run until late 2025, but Bitcoin may be shorter or longer. Well, that's an annoying statement, but I understand it because we don't have any previous history of Bitcoin being in the 18.6 year cycle. It's the first time. I would say my best guess is that Bitcoin would trade in unison with whatever is happening with the NASDAQ, right? So if the NASDAQ's going to top out in 2025, then ultimately you would expect Bitcoin to do the same thing. He says, the point is that this cycle is up. Do not waste this opportunity with bear porn and fearful news. Now, of course, in the short term, it is rather fearful because a lot of people are going to be down 30, 40, even 50% on some of their positions. And if they were dabbling in meme coins, they may even be down 80 to 99%. So here we are within the cycle. We currently just leaving this zone over here. Corrections are normal. It's part of the plan. It's part of the bull market. This is where you need to be incredibly careful. If there's one thing that you remember from this show, please let it be this. Remember that when it comes to the end of 2025, the last quarter, which is, of course, next year, please be very, very, very careful when it comes to your trades, right? If you do want to learn more about these types of things, macro cycles, understanding the trends, understanding the ranges, finding out how to read the order books and liquidation levels, sign up to Crypto School. We have put an extension. We do begin today. We begin today, but we've given an extension for the latecomers who still want to squeeze in because there was a lot of demand. They broke our systems last night. Use the link in the description below. Sign up to Whale School. It is entirely free. Valued at $3,000, but lucky for you, these sponsors have covered the cost of that course. So let's continue. Funding rate will most likely go negative if this dip continues down into the low $50,000 region. I think the high probability bounce area is going to be $55,000 to $56,000, which is very, very close to where we're at now. We'll show you on the lower time frames. ETF flows were once again negative, of course, adding additional fear and concern to the market, combined with what's coming up later today, which is going to be all of the economic data with the FOMC press conference and statements coming out from Jerome Powell. That does add pressure. And then not to forget that on Thursday, you have unemployment claims. And then on Friday is also going to be a big one with the PMI and the non-farm employment change data, which is going to be coming out. Stock market pushing into the resistance level exactly as anticipated. And I told you, watch for the rejection. We got the rejection, failed to get above that level. And now we're looking for one more sweep lower. From the top to the bottom of the next support on the stock markets, depending on whether you're looking at the S&P 500, NASDAQ, or the Dow Jones, is anywhere between about 5 and 7% downside before hitting that major support. So that's exactly what we're looking at. It is on its way there. Coinbase is now breaking out of what was previously its parallel channel. Now you need to do the same thing on Coinbase, is watch for when it comes down and pushes back up and rejects that level as resistance. It's probably going to go for the full run all the way back down to about $138, $140, which is going to be a buy the dip opportunity. Tesla, I also just put a Tesla chart on just out of interest to see what's going on over here. Tesla has been putting in lower lows and lower highs. It is caught within a major range. And even though it had a big spike up recently, it is probably going to give up these gains and sweep back below 120. So if you're trading Tesla, pay attention to that over there. We have been taking short-term trades on things like Tesla in the Discord. We had a beautiful long off that little spike. So if you are interested in trading things other than crypto, stocks, forex, or commodities, we do that as well in the Whale Room Discord. The link is in the description below. All right, big moves up over here from the DXY. It's looking really powerful, really strong. Look at this bullish candle over here, which happened on the 8th of April. Since then, it's ultimately been consolidating and looking to mount its next move towards the upside, which we did say was going to add a lot of pressure to the risk on assets. So until such time as the DXY starts to turn back over, pull back slightly, it's going to struggle for Bitcoin to find a major bottom. Now, this was the significant and very, very important area of support, which was the prior week's low, previous month's low as well, and plus the simple range low level that we marked off just based on touch points within the previous candles. We've now officially not only lost that level, but we closed and opened a new candle underneath. So last candle closed on the daily yesterday below those range levels, and the new candle is open below those levels, which is showing you that there might not be much breathing room in the short term for bulls looking for bounces. There is a possibility that this does just roll all the way over, hitting the low targets as low down as possibly $48,000. This is giving a much needed reset on the fear and greed over here. You can see that already hitting that 50 to 60 mark, coming from what was just a couple of days ago around the 80 to 90 mark, and even reaching as high up as the 90 to 100 percentile mark. We're really looking for at least a 40 to 50 reset. Throughout this bull run, you've seen that all the historical bottoms over here have printed the yellow dots, which is going to be the 40 to 50 marker at the bottoms. That's where the fear and greed got into the 40s to 50s for each major bottom. So lining that up with our price targets, you can see if you do start to see that fear and greed print a 40 to 50 over here, that could be an opportunity for the reset. And Bitcoin's approaching its trend line over here. We have our area of interest marked off for the fear and greed, which you can see all the previous bottoms, just giving you another visual perspective of how it's come down into those levels. Now, we spoke a lot about the Wyckoff distribution schematic 2 being in play, where previously we were hoping for schematic 1, where we were going to get an upthrust after distribution in phase C, and that was going to be the opportunity to take out a major head short opportunity. But instead, Bitcoin price followed schematic 2, which means that you showed weakness in phase C and already started to roll over. I did a show earlier this week talking about the transition from phase D into phase E, which would be where real fear would start to come back into the market, and the majority of participants begin to accept the fact that we are in distribution. Now, remember, this is a low time frame distribution within a high time frame macro bull trend. So this presents the opportunity to buy the dip as price comes into these levels. So fast forwarding into phase D, let's see exactly what's going on over here. We spoke about the last gasp of demand. That's exactly what's taken place on the price chart. Price then travels to or through the trading range support. We've now seen that that's officially ticked off, and then we have multiple weak rallies within phase D. We've also seen that all the rallies failed at $67,000, and then we were hoping for maybe just one more spike up into 66,000 to test if there was going to be another rejection. There was not another rejection. It was that week that went straight through that level. So what happens in phase E? This is the phase that we're in right now for this distribution. Phase E depicts the unfolding of the downtrend. I think it's pretty obvious right now. Lucky for the rest of you, we already spoke about this over a week ago. The stock or price chart then leaves the trading range and supply gets in control. Supply is officially in control for Bitcoin, and the breakdown is often tested, the breakdown level. So we'll show you where the breakdown level is in just a moment. And that gets tested with a rally which fails at or near the support and represents a high probability opportunity to go short and short sell. Now, keep in mind your levels, right? Of course, this is where we saw that things were really going to be in trouble, was within this zone over here. Let's just highlight it in yellow so it makes it a bit clearer for you. We said that as price bounced up into the mid-range and rejected from that 50-day moving average, that was an absolute screaming warning sign over here that there was the possibility that we were going to follow out this trajectory. And that is where I really started to preach the Wyckoff distribution schematic 2, which is now in play. Now, it's not really the time to panic now, because what's done is done and we're already trending down. Now, your major support levels are going to be coming down into this low region around the $50,000 mark. You can see how it lines up with that 200 daily moving average, which is always very, very significant. And 9 times out of 10, price will bounce aggressively off of that level, especially when it hasn't tested it for a long period of time. So hopefully we see something like that, but expect that you are probably going to see lower prices. Here we have our other price chart that we're looking at as well, just gauging all the different pivot levels and EMAs with moving averages. You can see the 9 and the 18 exponential moving average crossed over. Thus, we knew this was a strong sell signal over there. Price came down, broke through the trading range. We officially below the pivot level. The 200 EMA on the 1 hour time frame, as well as the 4 hour time frame, and more specifically as the posturing of those moving averages and exponential moving averages, with the short below the medium, below the longer term moving averages. this shows you that supply is in control and you would have to look for low prices. The RSI continues to downtrend. There was a little bit of a fake out scenario, if you draw it like that, where it looked like the RSI was starting to break out of the trend with the moving average following suit. But of course, we have to redraw with the lines of best fit. And that was obviously, in hindsight, a little bit of a fake out scenario where you can say, well, this is probably the line of best fit with the most touch points, meaning that RSI continues to trend towards the downside. This is the value of having the pivot level in place, which I update you on every single day. We know that we can use the pivot level as an indicator to understand when the RSI is telling the truth versus not. So if the RSI, if price were to reclaim above $62,000 for Bitcoin, that would turn the RSI back towards the upside. And every single day, this RSI level changes. So I will update you guys whenever that is relevant. Now, we can also have a look at Bitcoin's previous interactions with the 200-day moving average. If you look over here, or the 200-week moving average, excuse me. So if you have a look over here at Bitcoin, this has been super, super significant. We can also zoom in and take a look at these levels, right? Let's actually switch it to a daily since it's more relevant for the short term. So look at the green moving average over there. If you're on a mobile device, you may need to switch to a PC or laptop or bigger screen to properly see this. Now, we can mark off all the different levels as well to see where does the 150-day moving average fit in. Well, that's currently trending up. What about the 100-day moving average? We've just tagged the 100-day moving average right now as it currently stands. So let's turn those off and have a look at the previous interactions with that 100-day moving average to see in the prior bull runs how it interacted with those levels. So let's have a look at the last bull run. Okay, the last bull run, we only came in to test that a couple of times. That was before price went fully parabolic. Let's look at the cycle before that and see what happened over there. Same thing. Pierced the 100-day moving average quite a few times. Let's look at the 150. The 150 pretty much held for the duration of the bull market. And you can say that bull market came to its end when the 100 crossed below the 200. And if you look at the 200 in this particular cycle, which was the 2017 bull run, it was never pierced. Let's go back and have a look at the 100 interaction with the cycle before that, which was the 2013 bull run. So looking at the 2013 bull run over here, price trended way, way, way above that. Obviously faster trending, so you need to look at something like the 50. Okay, let's quickly take all of that off, go back, have a look at this. Let's zoom in. So the 100 is significant, the 150 is also significant, and so is the 200. The point being over here is if these moving averages start to converge into one another, then you know that you have a weakening trend and the bull run well and truly could be over. That's not the case. You can see prices holding above all of these levels and all the moving averages are still adequately spread apart from one another. That's a more zoomed in approach. So somewhere within this region, my expectation is that demand will be found once supply loses control and a bounce should be intact. Now, we can also look at the bull market support band, which takes the 20-week simple moving average and combines it with the 21 exponential moving average. So zooming in, let's just reset that and grab this point over here. You can see we almost at that level. Now, it doesn't really matter which area of support or resistance you look at within trading because we all have different approaches. Some people look at the 21, some look at the 30, some look at the 50, some at the 100. The point being over here is that you have to understand as long as that moving average or the support level is trending towards the upside, you are still in a higher time frame uptrend. The other significant point that you have to understand is that time reinforces that level. So if price hasn't come into that super important area of support, which this is, for a long period of time, then you can bet your best dollar 9 times out of 10, it's going to elicit a major reaction from that level. I do teach about this in Whale School. If you want to know more about these types of things like time reinforcing certain levels, Whale School is the place to go. Now, you can see over there, time has reinforced this level. It's been very, very, very long since we last tested this this bull market support band. Let's actually go and have a look. Let's look at the entirety of the cycle. So we haven't actually tested the bull market support band since leaving it in November of 2023. As soon as we left in November of 2023, we came very, very close to testing it in January of this year and then rallied straight out of that area. And now we're coming back for the first time. So expect a bounce, right? Expect a bounce from these levels. You can see the massive amount of liquidity, which is also below over here. The yellow bright areas at 57,200. As price moves into there, those are limit orders set by a lot of different market participants on big exchanges like Binance, and those areas will get filled. So here we have it, price losing the range. I think let's leave the 4-hour time frame. We've already covered enough with the other time frames, but this becomes the buy the dip zone as mentioned. So there it is, well schooled. Link is in the description below. I'm going to try and make today's show pretty quick for you. You can see spot sellers are fully in control. The orange line trending down very, very aggressively. So is the leverage. You have the open interest shooting towards the upside, showing you that people are opening up short positions, which is, of course, not the right move to be doing right now. You don't want to be opening up short positions as price is breaking down the trading range. You want to be opening up short positions based on a back test into the bottom of the trading range as resistance, and then you can start to turn or look for price to turn back down. Okay, what about ETH BTC? How's it faring up in this whole move over here? ETH BTC, ironically, is actually holding up. So it is defending the June 2022 lows over there. But ETH USD, you wouldn't want to be holding, right? This was the level to clear. We marked it off nice and bright on the chart over there, coming in at 3,554. That was the breakdown level. That's what you needed to reclaim to put risk back towards the upside, meaning bulls are in control. We said beware of the rejection from this level. We got the rejection on that candle on Sunday, and down we go. So this is currently in distribution for Ethereum, and I wouldn't be looking to go long at this point now until you get above 3,364. So you can move that invalidation level down. Bitcoin dominance still hovering around that 55% level, which is above the mid-range. If you focus on the bright yellow box over here, that is the mid-range between 50 and 60. This is the 55% level. You are in a rising wedge pattern, which is traditionally a bearish chart pattern. But I said, wait for the spike up towards 58 to 60% before converting any of your Bitcoin into altcoins. And so far, the trade of the cycle, honestly speaking, has been Bitcoin, right? If you compare to all the other coins out there, it would be like picking a needle in a haystack. In order to get the altcoins that have completely outperformed Bitcoin, they've been far and few between. Some of the likes of which we can name would be Solana. I know that Mantra, real world asset protocols also been outperforming. So these are things you need to look at, right? Here you have Total 3 coming down into the mid-range level. Really needs to get into the yellow zone for bulls to be in control. Pretty much straight rejection from the top side of the range, coming back down. Now you're looking for support to be found at this $558 billion mark. If you look over here, cumulative liquidation delta is going extremely negative over here with if price starts to spike towards the upside, you have just short of $1 billion worth of shorts which will be liquidated out of their positions, right? So late shorts are currently opening up. Looking at some of the altcoins, Solana is coming into a major area of support, very, very significant. If prices don't start to bounce very, very soon and it loses this area, don't be surprised if you see Solana at the very least trade down to $100, which is going to be the prior mid-range. And I would even open up the possibility of it trading all the way down into the $80 zone at a later date. Now, percentage drawdown wise, you're looking at from there to there, another 28%. I'm not going to go too deep into the altcoin sector because I think that was yesterday's show. I covered it extensively over there. I told you that altcoins are about to drop 30%, and I gave you every single reason in the book as to why that was to be the case. So we can take a few requests. We can indeed take a few requests. Let's have a look at GUMMY, also approaching mid-range. I'm going to also show you some of the coins that I have interest in getting allocation or positions into. This being one of them. We are officially hitting the fair value gap on Pepe coin. So looking for a little bit of demand to kick in over here, which so far, to be honest with you, it's not showing any signs of doing. So I'm going to sit hunky-dory on my cash position, and I'm not going to be deploying until I see a sign of strength within this position over here. And if we look at Base AI, which of course is linked to Pepe Coin over there, you can see same thing, officially hitting the support level. I told you guys, watch for anywhere between $3 and $4. This one's giving more signs of life, but it's not enough for me yet to go long. I will update all of you. If it's not on a live show and it happens before then, I'll update you in the Discord when I actually plan on buying into this token. Okay, let's see this one over here, the Lego one. Okay, they actually held up pretty well, very, very strong, starting to come down over here, creating that whole S curve. So let's see if you get an opportunity to get a higher low within that region over there. What else? In terms of the ban list, right? These people have been banned from getting their EigenLayer. These are the ban list countries. It's basically 3/4 of the world, it looks like. Russia, China, you have the whole, for some reason, the middle part of Africa. The middle part all the way down to where I'm from in South Africa, United States, Canada, and then we have over here, what is this, near Brazil, there's a whole massive section. So a lot of the world, as you can see, the non-banned areas is going to be Argentina, Brazil, Greenland, Australia, New Zealand, parts of Indonesia, Madagascar, and then random parts of Africa. Very simple. If you want to claim your EigenLayer, go through to NordVPN, sign up using the link in the description below. You get 67% discount if you use that exact link. Then set your VPN to one of these destinations. Claim your EigenLayer, call it a day. That's it. It's as easy as that. Also, if you want to be removed from the list of scammers that are constantly cold calling you, then you can go to 𝗥𝗬𝗕𝗓. It's part of the umbrella of the NordVPN suite. It's not available in every single country, so just check if you're eligible. Works out to $5 pretty much. There you go, $5 per month on the annual plan, and they'll get you removed from all of these databases. So all the links are in the description below for that. Let me know in the comment section if you want anything else charted. We're 26 minutes in. Perfect. I don't want to go too long. We can round it up at about 30 minutes. So give me a couple of coins that you guys want to have a look at. Okay, give me a couple of coins over there. Also, smash the like button over there, guys. It really, really helps to do me a solid favor. Smash the like button. All links are below, by the way, for anything that you need for Whale School. Oh, one more thing. For the next GUMMY airdrop, which is taking place, there's up to $30 million worth of, or 30 million worth of tokens. They wrote dollars over there. I think that's incorrect. If it gets to $1 per token, then yes, it would be $30 million. Have a look. There's 5 simple steps that you can use to get into that airdrop. I think that the most important one over there is number 5, sign up to Whale School, right? $3,000 course. You also get part of the next GUMMY airdrop, which is free money in your pocket for you over there. So let's see, what have we got over there? Let's see. Okay, 𝗕𝗡𝗡. Let's have a look at 𝗕𝗡𝗡. I see you guys want 𝗕𝗡𝗡𝗡. Okay, 𝗕𝗡𝗡𝗡 USDT. Let's hit it. Okay, distribution. I told you this is your main range level when it comes to 𝗕𝗡𝗡𝗡. Watch, it's probably going to come down into $20 zone. That's the level that you want to see it hold, and you're just trading at level to level, right? 20 to all the way at $42. That is your trading range for 𝗕𝗡𝗡𝗡. Okay, what else do we have? DOT. You want DOT? I can't think that DOT is doing very well, but let's have a look at DOT. Okay. So DOT's deviated the massive range that it has. At the end of the day, yes, indeed, DOT is coming into the mid-range level, which is very important. You can see there it is. This is a mid-range level which needs to hold. Failure to hold that level will mean that DOT is going to move all the way back down into the $4.45 zone, which is the bottom of the range. Okay, what else? TrueFi. Let's go look at TrueFi. You guys are asking for TrueFi. Isn't this the true inflation one, right? Must be this one. TrueFi, it's the true inflation coin, I think. Is it this one? I don't know. Anyway, I don't know if it's the true inflation one, but this is in fact TrueFi. So here you can see this is going to be your significant level that you need to get back above for things to flip bullish, which ultimately means you need to get above 16 cents. Really focus on these horizontals, guys. I mean, look how quick and easy it is for me to mark out these levels. Any one of you are capable of doing this. Mark at the range high, mark at the range low. For now, yes, it is theoretically uptrending in the sense that price has been moving with high highs and high lows. but this is the consolidation that led to a breakout. You don't want to see price get back below these levels. I'd even argue this level over here at 0.089 cents, no closing candles below there. If you get a closing candle below there, you increase the probability that you're going to move another 56% down into the bottom of the trading range, which means 4 cents is your bounce zone. Okay, let's look at 𝗕𝗬𝗕𝗓. We haven't looked at 𝗕𝗬𝗕𝗓 for quite some time. How's it been doing? Okay, in hindsight, closing all of those leverage positions that I had weeks ago was an absolutely amazing choice. And I think I'm actually going to start to look for opportunities between the course of today and tomorrow to reopen those positions. I think we're running at close to $200,000 worth of long positions over there. So we'll continue to manage those. Remember, the goal is to take that portfolio to $1 million before the end of the cycle. So that's the ByBit account. And then, of course, we have other accounts as well. By the way, if you want any trading accounts, if you don't have accounts open, use the links in the description below. There is links over there which you can claim sign-up bonuses from as well. Okay, let's go on to so 𝗕𝗬𝗕𝗓. That's the same chart that I showed. I said high probability you're going to sweep below $5. Most likely you're going to come into the $4.50 region over there. Look for a bounce from 450. Why 450? I told you yesterday, when you see big inefficiency candles, which are wicks, you view it in the same way that people would view gaps within the stock market. I'm going to highlight it in yellow. And what that means is you need to target 50% of the wick, right? So if we go and we use our Fibonacci tool and we mark out the 50% level, let's just quickly get that over there. There it is. That means that you're looking at $4.59 for 𝗕𝗬𝗕𝗓. That becomes a possibility. All right, guys, let's cut off over there. I don't want to go too long. Honestly, love you all madly. Thank you so much for watching. Let's keep the show short. I will see you all tomorrow. Have a great day and cheers for now.